Welcome back to Chain Train. This week, the crypto world is in turmoil. Bitcoin plummets amid panic selling. Trump pushes for a US Bitcoin reserve, and regulatory shifts reshape the market. Pension funds eye crypto, India tightens oversight, and banks get clarity on digital assets. Buckle up as we break down these seismic changes in the blockchain landscape. Bitcoin has fallen to $80,000 amid panic selling, with fears it could drop to $70,000. Trump's crypto czar David Sachs announced plans to manage the US government's crypto holdings under Treasury oversight, aiming to maximize value. Trump reaffirmed his goal to make the US a Bitcoin superpower, creating a strategic Bitcoin reserve and a crypto stockpile with XRP, Solana, and Cardano. Investors reacted negatively to the lack of new Bitcoin purchases. Analysts suggest this move could trigger global adoption, with China potentially considering its own Bitcoin reserve. Bitcoin experienced a significant decline on March 9, 2025, dropping approximately 5.47% to $81,555. This downturn coincided with President Donald Trump's signing of an executive order to establish a US strategic Bitcoin reserve, a move that introduced uncertainty among investors. The broader cryptocurrency market mirrored this trend, with Ethereum falling 5.4% to $2,024. 68 Dot analysts suggest that Bitcoin's price trajectory in the coming quarter could fluctuate significantly, potentially reaching highs of $125,000 or lows around $77,000, largely depending on the implementation of President Trump's crypto policies. Pension funds in the US and UK are increasingly investing in cryptocurrency ETFs due to rising prices driven by Donald Trump's endorsement. However, experts warn of risks, citing crypto's volatility and past pension fund losses, such as Ontario Teacher's $95 million loss from FTX's collapse. While crypto could help pension funds struggling with an aging population and low returns, concerns remain over its speculative nature and potential future crashes. Bitcoin's scarcity could drive long-term value, but high mining costs and transaction fees pose challenges. Pension funds must balance innovation with protecting retirees' savings. Bitcoin's drop to $80K triggered a sell-off in crypto-related equities, with Coinbase, Coin, and MicroStrategy (MSTR) down over 5%, and mining firms Mara Riot Cores and CLSK declining by at least 2.5%. The downturn follows President Trump's executive order on a strategic Bitcoin reserve, which disappointed investors as it only included seized assets, not new purchases. Market fears deepened, with Trump's comments on a possible recession pushing the crypto fear and greed index to a multi-year low of 17. The S&P 500 also suffered, marking its worst session since September. Pension funds are cautiously considering crypto exposure despite concerns over volatility. Meanwhile, Bitcoin ETFs gain traction and institutional interest rises, but regulatory uncertainty looms. Crypto remains a high-risk asset, and while some see long-term value in Bitcoin's scarcity, its future remains uncertain amid economic and political shifts. XRP saw a surge in trading volume, with 1.43 billion tokens traded in 24 hours, yet its price dropped 8.97%, staying far from its all-time high of $3.84 in 2018. Despite increased open interest, the market remains indecisive, raising speculation about a potential price breakout or manipulation by large investors. Whales. Traders on Bitget, Binance, Bybit, and Gate.io are highly active, with Bitget leading at 28.89% of open interest. Some attribute the frenzy to XRP's inclusion in the US strategic crypto reserve, while others see it as a short-term speculative move. Whether XRP breaks the $3 barrier or faces another correction depends on market triggers. Investor sentiment remains split between optimism and skepticism as liquidity continues to flood in. The coming days will determine whether this momentum leads to a breakout or another cycle of stagnation. The OCC's new interpretive letter, 1183 IL 1183, reaffirms that national banks can offer cryptocurrency services, providing long-awaited regulatory clarity. Since 2020, banks struggled with ambiguous guidance as regulators selectively ignored IL 1170, which initially permitted crypto custody and trading services. IL 1183, signed by Acting Comptroller Rodney E. Hood, signals the US banking system's official embrace of crypto. While banks can now facilitate crypto transactions, they still cannot hold cryptocurrencies on their own balance sheets. This shift could bring stability and trust to crypto markets, moving assets from unregulated exchanges to FDIC-insured institutions. However, challenges remain. Banks must develop robust risk controls and consumer protection concerns persist. The move aligns with the US government's push to establish a strategic Bitcoin reserve, positioning banks as key players in the evolving digital asset landscape. President Trump is pushing the US towards becoming a crypto leader, formalizing a never sell Bitcoin strategy via an executive order that prohibits the government from selling its Bitcoin reserve. The reserve, initially funded with 198,100 BTC from asset seizures, sets a precedent for sovereign crypto holdings. Treasury Secretary Scott Bessent confirmed the dollar remains the global reserve currency, but stablecoins will be integrated. A new US digital asset stockpile will hold XRP Solana and Cardano separately from Bitcoin. Trump's administration frames this as a digital Fort Knox, with no taxpayer funding, dismissing speculation about selling gold for Bitcoin. These moves mark a significant shift from previous regulatory hostility aiming to strengthen US dominance in digital assets. India is ramping up forensic investigations into cryptocurrency-related crimes, with cases rising from 11 in 2020 to 291 in 2024. The Ministry of Home Affairs reports a 45% increase in crypto-related crime, with $5.6 billion in losses by 2023. Law enforcement agencies are instructed to analyze suspicious transactions and share data to curb illegal activities like money laundering, fraud, and ransomware. Investigators found that criminals often use the same crypto investment platform, leading to increased scrutiny. As crypto transactions bypass banks, regulators are tightening oversight to prevent misuse while balancing innovation in the digital asset space. That's a wrap for this week's Chain Train. With markets swinging, regulations shifting, and governments diving deeper into crypto, the road ahead is uncertain but exciting. Stay ahead of the curve. Subscribe and join us next time for more crypto insights. Until then, ride the waves and keep your digital assets secure.